I truly believe that proper bookkeeping has the power to transform a real estate investing business. Thanks for finding your way to this video. I'm Kristen Ambrose, the founder of Ambrose Bookkeepers, and I want to take a little time to tell you more about myself and my business, and also get to the good stuff. I'm going to share my screen and we're going to walk through QuickBooks and exactly the steps you should be taking every month to do your real estate bookkeeping. And also we're going to take a look at the reports that we're reviewing with our clients monthly. We're going to look at long-term rental reports, short-term rentals, flips, and we'll also look at rehab reports. So let's get into it. A little bit of background on me. I studied accounting in college and I got my CPA license shortly after. I started my career working at a Big Four accounting firm and then transitioned over to work for a financial consulting firm. In both of these roles, I got to work with small businesses to help them optimize their monthly bookkeeping and financial close process, and also help them prepare accurate monthly financial reports. In 2020, I started investing in real estate myself. My husband and I house hack in New Jersey, and then we also use the BRRRR strategy to invest out of state. And in 2022, I decided to combine my two passions of accounting and real estate and started Ambrose Bookkeepers with the intention of providing really high quality bookkeeping services to other real estate investors and helping them grow their businesses and their portfolios. So who this is for, Ambrose Bookkeepers works with all different types of real estate investors. We work with long-term rental holders, short-term hosts, fix and flip, BRRRR, wholesalers, realtors. We work with all different types of investors. And we can help you if you want to finally feel in control of your bookkeeping and you no longer want to dread tax season and wait until the end of the year to do your books. We can really help you gain control of that bookkeeping process and use it as a strategy and a tool to grow your business rather than something that you're dreading every month. I wanted to touch on a few challenges you may be facing if maybe you're not prioritizing your bookkeeping. So if your bookkeeping isn't done timely, you can't use that real-time data to make decisions. And really making decisions using current data is so helpful. So for example, if you're doing multiple rehab projects in a year, whether it's the BRRRR strategy or you're flipping, you really want to be timely tracking all of your rehab expenses. What did you spend towards plumbing? What was electrical? What are my closing costs? We can analyze all that data on our first project and then use that to make better decisions on our second project, more timely. So you can make a better offer, a better budget, and then, at the end of the day, make more money on the next project. If you're waiting until the end of the year to look at your numbers, you're not getting that timely advantage. Next, if you do have a bookkeeper, but they don't really understand real estate investing, then you're kind of getting financial data that isn't useful to you. I see, mistakes a lot from other bookkeepers on really like purchase, closing, refinance, those HUD statements. They're complicated to do the bookkeeping for, and if it's not done correctly, then the financial data that you're getting is not accurate, and then you're using inaccurate data to make decisions for your business, which isn't helpful. Like I touched on before with the rehab expenses, if you're not tracking them, you're likely always going over budget and you don't know why. Once you really get harnessed in on tracking those, then you can make better decisions. And if maybe you're overspending in one category, you can quickly adjust and adjust the budget in another category and then still hit your goals. So unless you didn't start become investing in real estate because you wanted to spend time on your bookkeeping, likely a lot of my clients come to me having done the bookkeeping themselves, and they are very, very happy to be saving lots of time that they can now spend on investing activities like speaking with realtors, contractors, all types of activities like that. So if these challenges resonate with you, here are the solutions. You need to hire a bookkeeper that's an expert in real estate investing, so that you can be reviewing your financial statements monthly and using that to make real-time decisions. And this will allow you to scale and grow your portfolio in the most efficient and cost-effective way. So a little bit about how the monthly bookkeeping process works for our clients. So we close the books within 10 business days of the previous month. So if it's June, by the 10th business day of July, you'll have all of your financial reports and your bookkeeping done for the month of June. So on days 1 to 3, so July 1st through 3rd, we're going to be categorizing all of your transactions from the bank and credit card feeds. Then we'll send you a request list of any questions that we have. Maybe we need a closing statement, things like that. Most of our clients just prefer to get one request list a month rather than answering a bunch of ongoing emails. That's why we do it that way. And then we'll reflect your responses in QuickBooks. We'll reconcile the bank, the credit card, and the loan accounts so that we make sure what's in QuickBooks is what's on your statements. And then we'll run the financial statements for you, and we'll review them for accuracy, and we'll also leave any comments or things that might look off, in our opinion. And then we'll schedule a monthly financial review call with you. We can set this up at a monthly cadence to the end of the month. So next I want to get into the good stuff. Let's get into QuickBooks, and I will show you kind of what it looks like to do the bookkeeping in QuickBooks and what the reporting should look like for a real estate investor in QuickBooks. We'll start with talking about the bank feeds. We'll look at reconciliations. We'll look at some example financial statements and a rehab report. Okay, so here we are in QuickBooks. I just set up this example real estate investing business, just, to show kind of what the bookkeeping looks like. I set up 3 entities within this QuickBooks profile, one long-term rental business, one short-term rental business, and a flipping business. And this is a great example of how if you have multiple entities, you can keep them all in the same QuickBooks subscription. So we use the business field within QuickBooks to assign your different entities, and then we use the class field to assign your different properties. So we're going to go through a great example of what that looks like here. But first, I just wanted to talk about the bank feeds. So you go to this transaction and then bank transactions, and here you're going to connect all of your bank and credit card accounts. So it's really simple. You just go to link account, and you're basically logging into your bank and credit cards, and that will be able to pull in all of your transactions. Usually we start with the beginning of the year, whatever year we're working on. So we can see here I have a checking account connected, and I also have an Amex credit card account here. You can see all of our transactions have been booked on the Amex credit card, and we still have 4 transactions open to book on the checking account. So we'll do that together fairly quickly. So we can see here that this was a Home Depot charge. And this, I know that this Chase checking account is just used for our long-term rental business. So this is going to go to repairs and maintenance expense. We don't use a customer unless we're doing a rehab project, but this is just a standard repair. The business is going to be the long-term rental business. So you can see the 3 different types of business here. We're going to select what this expense relates to, and this is going to be for the property is 2 Long-Term Rental Road, obviously just an example name, but this would be your actual property. And then we'll hit add. And this will then flow into the financials in QuickBooks. So we can look at another example here. So we have rental income from our tenant, John Smith. It's rental income. The business is long-term rental business, and this is going to be for Long-Term Rental Road 1, and then we just hit add. So fairly simple to categorize your transactions. It's just a matter of getting used to what transactions you're seeing every month, and then we can, mostly do all of this ourselves. If we have questions on any transactions that look unusual or something new, that's what we send you on the monthly request list. So then I want to show you how to do reconciliations, because this is another kind of big issue I see when I bring over new clients, is that their accounts aren't reconciled. So they might be feel like their books are done, but really until your QuickBooks balance sheet balances match your bank account, your credit card account, your loan accounts, you're not done. You need to make sure those things are reconciled. That way, you have everything in there, everything's complete, and then you can start reviewing for accuracy of where things are categorized. So we're going to reconcile this Chase checking account here. So how this works is, let's uncheck these. So in this reconciliation feature within QuickBooks, you are going to populate what your opening bank balance is. So I'm going to, in theory, open up your bank account. You would give us read-only access. I'll pull the statements, and I would populate what the balance is here. And we, so in this example, the bank balance says it's $21,113 as of the end of December 2024. I would hit save. So it's saying this is the statement balance. And then down here, we have all of the transactions that have been booked to this account in QuickBooks. So we would go through and look at your statement, look at your QuickBooks and say, okay, this transaction's on the statement. This transaction's on the statement. And we would go through one by one. Eventually, you're going to get through all your transactions. And this is what you want to see. Statement balance says this, QuickBooks says this, and then we can finish our reconciliation. And these recs will be saved in QuickBooks, so we know that that account has been reconciled through the end of the year. And we would do that with your checking accounts, your credit card accounts, and your loan accounts. I think next thing we want to take a look at is the financial reports. So super important, kind of what you'll be reviewing monthly to help make decisions, to grow your business, scale your portfolio. So QuickBooks has a bunch of standard reports that are really great in here. But what we do for our clients is we save custom reports just so it's easy to rerun them month over month. I'm going to start with the balance sheet by business. So this is for the year 2024, and we're displaying the columns by business. So like we talked about before, we have a long-term rental business, a short-term rental business, and a flip business. And these are really going to line up with your different entities that you have that make up your business. So you have the entities going across the top, and then we'll get into the details. So your balance sheet is what you own and what you owe. Most people are more familiar with the profit and loss statement, which is what we're going to look at next. But yeah, your balance sheet is really important to show those balances of what you own and what you owe. For example, your checking accounts, your properties, those are things that you own. And then as far as things you owe are your credit card balances or your mortgages, your loans, things like that. So at the top here, we have our current assets. So that is going to be our bank accounts. And we can see that there's a different bank account for each business here. And this is the balance that we had just reconciled. So we reconcile these monthly. Then we get to other current assets and we see construction escrow and tax and insurance escrow. So first, construction escrow, we see this on the flip business. This is really common if you're doing a rehab project that you've obtained a loan for and the lender is holding back a portion of that loan and you draw down on those funds as you do the rehab project. So that's recognized as an asset on your balance sheet. And then as you're getting those rehab draws, we will be decreasing this amount as you go, because then it's no longer something you own, it's something you owe, so it moves to the liability section. So then we have tax and insurance escrow. This is for any loans that you have or mortgages that where the lender is paying your property tax and insurance for you. So when you're paying your mortgage monthly, you're splitting out that cost between interest, principal, and escrow. Interest is going to go straight to your P&L. Your principal is going to go to your liability balance, which we'll look at it in a second. And your escrow is going to start on the balance sheet here, where we see it here. And then when your lender does pay your property insurance and property taxes, we'll book a journal entry to move that balance from an asset on your balance sheet to an expense on your P&L. So property tax expense, insurance expense. The next section we get into is your fixed asset section. So we can see here on our long-term and our short-term rental businesses, we own some properties. Typically the fixed asset section is broken out between land, buildings, closing costs. We also usually have a capital improvements account. And here you're going to be recording the cost basis of those properties. And then once your tax CPA calculates your annual depreciation, we're also going to be recording our accumulated depreciation here. So we always have a good picture of, the value of the property and how much of it has been depreciated. Then we get down to our liability section. This first current liabilities is your credit cards. We see that the Amex balance is $68,000. That's again another balance we would reconcile monthly. And we would get to this next section, other current liabilities. These are 2 hard money loans. We can see that one has already been paid off, and the first one is still outstanding. And this ties into that construction escrow that we were looking at above. So this is the amount that your lender has already provided to you, whether to purchase the property or for some rehab expenses. And then we get to the next section, which is long-term liabilities. And we have 3 mortgages here, 2 for our long-term rental business and 1 for our short-term rental business. And this is where, that original loan value goes, but also with each mortgage payment, you're taking the principal amount and deducting it from these balances here. And then down here, we have your equity section, and this is going to track owners' contributions and distributions into the business. If there's more than one partner or owner in the business, we'll have multiple accounts, one for each partner, so that we can track what's been contributed and distributed by partner. Then you have retained earnings. This is going to be the sum of all of your income or losses from prior years. This is a new QuickBooks subscription, so we don't have any retained earnings in this example. And then your net income is coming straight from your profit and loss statement, which you may be more familiar with. We're going to look at that now. And the cool thing about this is you can click into these amounts and it'll bring you right to your P&L. So let's first look at the profit and loss statement for the long-term rental business. So here we are, we're looking at the P&L statement for the long-term rental business. And I like to filter this by class. So that really, but class is the same as property. So this is just the long-term rental business. And now we're looking at it by property. And there's always going to be a general class, which will be for expenses that are not property specific, but more so just like general admin expenses. So we can see here we have 2 long-term rentals, and we have rental income in the income section. And then we have a bunch of direct expenses that are directly related to the operation of the property. So we call those cost of goods sold. So we have HOA fees, interest expense, property insurance, property manager, property taxes, repairs and maintenance, and utilities. So all of those expenses get deducted from our income, from our rental income, and that gets us to our net income amount here. So we can see that we're profiting $8,462 on long-term rental 1 and $3,781 on long-term rental 2 for the year. And then, of course, we have that general class like we spoke about. That's just general admin expenses, so bank fees, legal fees, meals and entertainment, office, supplies, things like that. And you did spend $1,880 this year on that. So total net income for the long-term rental business is $10,363. So yeah, that's pretty simple. P&L. We like to keep the chart of accounts as minimal as possible. I don't like looking at a balance sheet or a P&L that has a million accounts. So we find it much easier to just keep the chart of accounts really simple. That way it's easy to read. You can look at it monthly. It's not overwhelming. And then you can make decisions based on this information. So I want to go back and now look at our short-term rental business. So if I drill into, so this is our profit and loss for the short-term rental business. Again, I'm going to filter by class, and we can see here there's only one property for our short-term rental business. And Similar to long-term rentals, we like to keep the chart of accounts really simple. Of course, there are some different accounts here that you can expect to see for any short-term rentals. So we have cleaning income and short-term rental income in the income section. We like to break out cleaning income so that you can compare, what did you collect in cleaning revenue compared to what did you pay in cleaning costs. So we can see here we collected $3,200 and we paid $2,950, so pretty good. And then your cost of goods sold, you have things like your host fee, that cleaning, and then a lot of the same expenses that we see for the long-term rentals. And of course, supplies and materials are also big in short-term rentals. So we track all of your expenses and your income here, and then you see that your net income for this year was $13,270 on this property, and this business only has the one property. So finally, let's switch over to look at the flip property P&L. I'm going to drill into that. So again, I'm going to filter by class, and we can see here that our flip business has two properties within it in 2024. One has already been sold, and one is still in the rehab process. So we will recognize, we keep the flip account chart of accounts even more simple. We number them to 6. So we have a flip sales price. So once the property is sold, that sale price will be recognized here. And then we break out purchase price, acquisition costs, rehab costs, holding costs, selling costs, and debt service. So we keep it really clean on the actual P&L for your flips. We don't want to go crazy tracking things like plumbing, electrical. Not on this report. We keep it high level here, and then we have a rehab report that gets it a little bit more granular so that you can use that data to make your next rehab budget. So we're going to look at that next. But we'll see here that this property, 8 Flip Ave, has already been sold. The profit was $64,300. And 7 Flip Ave has not been sold yet. So actually at the end of the year, what we're going to do is move all of these expenses from the profit and loss statement where it is now to the balance sheet as sort of a work in progress account, so that next year when you sell this property, you can recognize the revenue and the expenses together. So that would just be an entry, a journal entry done on the last day of the year that's then reversed on the first day of the next year. So really just for tax purposes, you don't want to pick up all these expenses this year and then pick up all that revenue next year. You want to match them in the same period. So what's cool about keeping this high level and then being able to then drill into the rehab expenses is you keep things simple to review, and then you can get more granular when you need to. So this is an example of our rehab report. So you can drill into it that way. I also, if we go back to custom reports, we have it saved here. A little cleaner. I get rid of some of the columns we don't need. So as you can see, this is going to tie to that rehab balance that we saw, the $68,395. And here we use the product and service field within QuickBooks to really get into that detail. We have, tile, carpet, flooring, doors and trims. So really whatever level, we take our clients' rehab budget and we use that to create these products and services so that they can track. We'll pull this into Excel for them, create a pivot table, and we can compare what your budget is to what your actuals are. And you can also use this data to make your next rehab budget, which our clients find very valuable. So that's kind of a really quick rundown of QuickBooks, the bank feeds, the reconciliation feature, the reporting, and here's our rehab report. So our clients are getting a balance sheet, a P&L, and rehab reports every month, and we're reviewing them for accuracy and discussing them monthly. So yeah, that's kind of what an ideal bookkeeping process should look like for a real estate investor. And if you're interested in discussing more with us or learning if we could be a good fit to work with you, you can book a discovery call on the link on the website. And yeah, looking forward to talking to you. Thanks.